What's up, everyone? Welcome back to the channel, and thank you for subscribing to Not Your Father's Capital. Tonight, I'm going to talk a little bit about some key macroeconomic factors that are going to be happening in the first week of November and the prospectus of what this is going to result as we get into the end of Q4 and into 2023. I'm going to let you guys know my thoughts and analysis on what this will do to the crypto markets globally at the end of this video. So if you have not done so, please subscribe to this channel, drop your comments down below, and hit that like button. So let's get down to it. So everybody's aware of the PMI that we have been experiencing, and back-to-back months below 50 indicates a recession. Despite your political beliefs, this is a recession by the letter of the law. Okay, so the PMI is showing slight economic slowdown. That will be released on November 1st. And this is basically going to just it's a performance indicator that we are seeing not just in the United States, but also in the Eurozone, which is any country or any nation that uses the euro as their currency. They are basically a correlation of the United States, and globally, when we look at how the crypto markets are reacting or what kind of pattern they're in, the PMI is not just important to consider in the United States, but also in Europe and farther. Okay, so basically what we're looking at is this will be the indication for the economy is slowing down, and basically this has to do with a lot of the Fed interest rate hikes that has been happening as of late. And tomorrow is the big day where Powell will take the stand and basically tell us how many basis points we're going to be looking at in the hike that is expected tomorrow. Okay, so I'm going to touch on that a little later and what I'm going to be looking for and what possibly could happen that may make us result into a bullish pattern entering the end of the week and in the weekend. Okay, so also the labor market. All right. The U.S. Department of Labor is predicting basically that there's going to the unemployment rate is increasing. All right, so what happens with this is interesting because it's an inverse relationship between the rates of unemployment going up. This will also cause the hiring to decrease. All right, so when that happens, this is basically going to it's going to cause the Federal Reserve to be cautious when they are going to raise interest rates. Okay, so that's what we're all looking for. We're looking for a cause for concern with raising interest rates. The more of those that we have from a macroeconomic scale, the better crypto markets are going to perform. Okay, but you have to be careful because they have to be warranted. If they're doing it just because they want to see crypto or other markets or the stock market do better, then we're just basically prolonging the inevitable when it comes to inflation and how these markets are actually operating within themselves. So, like I touched on it earlier, the 75 basis point increase is what is expected to a total of 4% come tomorrow. All right. So when that happens, we all know, riskier assets, volatile assets become very much sold off, and then we can see a trend lower when it comes to crypto. All right. So when we're talking about tomorrow being the number one thing when it comes to how these crypto markets are going to perform, it is and it isn't, and I'm going to get into that at the end when we talk about Bitcoin in more depth. Okay, so when I talk about Bitcoin, though, it is important to note that Bitcoin is kind of the riser of all tides when it comes to crypto. So due to crypto's nature and the purpose of its creation essentially was decentralization, to get away from all of these macroeconomic factors, to get away from the banking system, and so basically become the ultimate hedge against inflation. Contrary to what that was established for, we are actually trading alongside of inflation and interest rates in the banking system due to all the institutional money that plays a role in how crypto trades. So that being said, there would be some logic supporting the idea that if interest rates go up, crypto should go up in some form or another. You should be rooting for that. But as I touched on it, the institutional money does have quite a bit of impact within crypto, and they will not be getting into volatile assets. They will be liquidating. So that will be what we have to look forward to tomorrow with the 75 basis points. Okay, so another global macroeconomic scale factor that we will look in is politics. Okay, so midterms are around the corner, and the future of crypto has a role within these midterm elections. However, not so much as you would expect. Republicans are favored to take over Congress, to have a very big red wave when it comes to the Senate and the House of Representatives. And that lends to being more pro-crypto than Democrats. However, due to Joe Biden being in office and a lot of legislature that was put into law, there's going to be a stagnant period where basically you have to go through a lot of hoops and ladders and put a lot of bills to basically redo or undo everything that was done in the last 4 years, so that you can kind of strike back and to get a more pro framework when it comes to pro crypto within Congress. So that's all it has to do with politics. That's going to be seen, but not just come November. That's going to be more down the road, despite how positive those midterm elections will be. And to conclude, I just want to touch on Bitcoin once more. As I noted, it is the riser of all tides. If Bitcoin goes up, altcoins go up. If Bitcoin goes down, everything goes down. So as you can see by this chart right here, we have been seeing a support level at 18,000 right here. And then, this is the resistance that we've been seeing at this 20,000 level, right, for Bitcoin. All right. So when it comes to that is forming a very bearish pattern. Okay. This is called a descending triangle. So when we look at this, you can see how it's kind of, if it busts through this 20,000 level, this could cause a bullish sentiment when it comes to how crypto will be trading post November 2nd, when the interest rate hike is announced. You could see a breakout, maybe short-lived, but you would see a breakout as that bearish pattern will get invalidated. Okay, so this is important to take home with you, because the most important thing from tomorrow, when we talk about the Fed releasing their interest rate hikes, is the 75 basis point expectation is kind of baked into this level that we are trading at, not just with crypto markets, but in the stock market, within the S&P, within the Dow. Everything is very much priced in because we have been anticipating one more rate hike in 2022, and there has been no indication as